All right. Hello, everybody. Welcome back to another episode of The Market Close. We are officially live. And, well, today was a pretty ugly day, to say the least. Today was a pretty ugly day. S&P 500, it looks like it's going to close down about 1.5%. Nothing has really changed or gotten better since the morning. In fact, it's gotten worse, 1.45% right there. The most ironic thing about what we're seeing right here on the S&P is that, on Thursday last week is when we had the same pain. And a week later, we are not exactly right back to those same levels. Some of those stocks have hit some of those moments today, but we are approaching those levels. As the S&P right there is at 681, down about 1.46%. Silver, ugly day. SLV, that's down 11.57%. Bitcoin, 65,000. Verizon did hit $50 at one point today. It was up 1.38%. BMNR actually doing okay. So Ethereum kind of holding on. Core, we've also kind of dodging some of the bullets here in terms of pain. But Tesla, that's down 3%. ASTS down almost 17% on the day. AppLovin, new lows right there. 368, 20% down on the day. IGV software was getting bid up a couple days ago. Now it is going back down 2.7%. Amazon cannot find a bid over 200. Meta below 650. Nvidia below 190, 187. I think all of us were waiting for that to happen. It was holding 190 for the majority of the day. Then it kind of fell through. Palantir 129. Robinhood got hit pretty hard today. 71.28 down 8.5. SoFi almost touched 18. I mean, it's just a bloodbath of a day. Just a bloodbath of a day. Ironically, somehow, in the midst of the S&P almost down 2%, Grab is holding green, which is kind of crazy because any other time Grab would be down like 10% with it. But it is a pretty ugly day. The only thing that was, quite frankly, green in a meaningful way was memory. Now, memory did lose a bunch of their gains that they had in the morning, but still, Micron ending up at 1.2%, SanDisk ending up 4.7%. And those were the only names in the sort of broader growth sector that were green. What actually ended up green today was energy, healthcare, utilities, industrials, your Verizons, your Coca-Colas of the world. Did you guys know Coca-Cola is up 15% year to date? I mean, the market has basically said we are going to sell off the tech names that are growing just because, I don't know, they're spending on CapEx in order to rotate into the value names that I guess are offering more protection right here. And I think a lot of the conversation today has been around this idea of the value to growth rotation going in the opposite direction. And you're seeing that in some of these names like Coca-Cola and Verizon getting some momentum. Now, we did have a pretty successful 30-year bond auction today. The 10-year down a decent amount, 4.104. This thing was stuck at 4.2 for a very long time. So it's nice to see that this one at least got some momentum to the downside. The other reason why the 10-year got hit is because housing sales were really bad. We missed by like 9% existing home sales. And so that gave another reason to the market to think, well, rates are inevitably going to come down and we should lock in these rates while we have them before they end up getting too far down. In fact, the March probability is it's not a massive increase, but we went from 5 to almost 8% today on the chance of a rate cut based on that home data. So I think that's why you saw bond yields kind of take a bit of a breather, which is something that we've been waiting to see. Now, what were some of the main growth headlines that are important? By the way, we have a lot of earnings after the bell. We have Coinbase, Anet, Roku, Draftkings, Tost, Dutch Bros, Pinterest, Rivn, Twilio. So we have a lot of companies, Arista, Airbnb. I'll be covering all those companies and probably at around 4:30. So in about 40 minutes, Jason will hop on and we will do Technical Tuesday, which is today for Thursday, until 6. And so we'll get a good hour and a half with Jason to kind of run through what he's thinking about some of these tickers as well. The big headline in the AI space is Anthropic ended up completing their fundraise, $380 billion post-money valuation, $30 billion on the fundraise. It's quite incredible to see this momentum by Anthropic. They also disclosed that their now annual run rate is $14 billion in revenue. That is 10x for the past 3 years. If they do it this year, it'll be $140 billion. Not sure if they're going to do that, but pretty incredible that you are getting some more of this momentum. Elon was not really the happiest that they raised this money. He ended up commenting underneath their post about raising $30 billion. Your AI hates whites and Asians, especially Chinese, heterosexuals, and men. This is misanthropic and evil. Fix it. Frankly, I don't think there's anything you can do to escape the inevitable irony of Anthropic ending up being misanthropic. You were doomed to this fate when you chose your name, the name of the wind. I'm not going to lie. That second to last sentence has a ton of aura. You were doomed to this fate when you chose your name. I don't know if I agree with Elon entirely here, but that's a hell of a line right there. So yeah, Elon's not really happy about this, but Anthropic, $30 billion, $380 billion post-money valuation. Anthropic is really the reason that has caused all this sell-off in the SaaS space. We've talked a lot about it over the past couple of weeks, that the SaaS names have been getting absolutely obliterated because, quite frankly, Anthropic's enterprise workflows have seemed to commoditize a lot of these SaaS workflows. The idea that you can vibe code a lot of these things out of existence, that's hurt real estate, that's hurt the software companies, that's hurt the brokerages, and that pain continues. Wow, S&P new low of the day, 8 minutes until we close. VIX is at 21. It makes sense. That VIX, it tried to go below 20 for like an hour, and then it just ended up giving in. VIX right here, 21. That's up 20% on the day. S&P down about 1.65%. Unfortunately, as you can see, a lot of sectors that were green in the morning on the left-hand side of my screen, they ended up going red. Real estate is still up a little bit, and then consumer staples is up, but industrials went down, energy went down, financials went down. Obviously, technology down 3% on the day. The Qs got hit. So the sectors that even were leading today, a broad market sell-off took everything down. And that's what you're seeing right here. The Qs right there below 600, down about 2%. Let me put the poll in the chat of which one you guys think will outperform. There's a lot of earnings today. You could also put in the chat the one you're looking for. I think most people here, I mean, honestly, I don't know if a lot of us are long these names. I think Coinbase is a long here. So which one outperforms? You have Coin. I really don't think a lot of you guys own Airbnb. I think Rivn is up there. Arista, I do think a ton of you guys own. Coin, Rivn, Anet. And then we got one more. Let's put Dutch Bros. I know this one, Matt Money likes this one, Dutch Bros. Let's put that up there. So which one do you think outperforms? AMAT's actually a really important semiconductor name, Applied Materials. So that's one that I'll be looking at. This is a $261 billion company. But in general, this is a tough data report, man. This is a really tough data report. You just got negative sentiment across the entire board, and you're seeing a lot of momentum get hit. It is kind of crazy that a week later from the bloodbath that was last Thursday, after we recovered on Friday, which not full recovery, but a decent chunk of it, we're not right back to those levels. S&P got to get to 671, but if we get a bad CPI tomorrow, I mean, who knows? Who knows? S&P 1.53% down on the day. Palantir, we got to, I think, what, 126 at one point, bounced at 129. Hood almost went below 70. Now it's at 71.26. Again, SPY at 681. Micron, that's up about 1% of the day. Rocket Lab got hit pretty bad, down 5. JP Morgan, biggest bank in the world, that shouldn't be getting hit too hard, but it did, 2.5% down. ASML is down. MicroStrategy is down. Marvell is down. SMCI is down 5. Fluent's down 1. Quantum names getting smoked again. Zeta down 7%. Costco was up. Eli Lilly was up. HIMS below 16. Coinbase down 7.5. I mean, Coinbase is down more than 50% from the highs at this point. HubSpot held up. It's 9%. Also, Crocs, I think this was the story of the day, 19%. I think I finally figured out why Crocs was green outside of the negative 4% year-over-year growth. I didn't know that they partnered with Hey Dude, and Sydney Sweeney partnered with Hey Dude, which partnered with Crocs. So Sydney Sweeney is kind of promoting Crocs as well. I mean, yeah, how could you fade Sydney Sweeney? So it makes sense why the market took this one up. But there you go. And then Fastly was up 90%, because why not? Why not be Fastly and go up 70% in a day? CDN company, still is a SaaS company, if I'm not wrong, $2.3 billion market cap. That stock was up 70%. So that's what you got. That is what you got. Let me know in the chat if anyone did anything, made any changes, bought any dips. I really didn't do anything with the portfolio today. Quite frankly, I've been busy the whole day. And I don't know, just when I would check it every hour, it was just more red. I was like, okay, it's more red. It's more red. Even Apple, dude, freaking Apple, 262, 280 to 262. This one got nuked. Nebius also, well, Nebius actually is kind of green. This one's a bright spot today. Nebius and Grab actually held up a little bit. But Iren got hit, Corey got hit, and then Apple down 5%. It's not fun. Apple's a big part of the S&P. Where's Reddit? Reddit was at 135. Reddit 130. Down 6 again. Hit 127 at one point. My goodness. Matthias said I bought CRM leaps for the culture. You know, I I really do want to pull the trigger on IGV. I really, when you really think about it from first principles, it feels like the SaaS sell-off is stupid. It feels like the market is being stupid, thinking that Anthropic is going to vibe code away these massive enterprise software companies. Not saying they're going to grow like crazy over the next 5 years, but they definitely aren't going away. And maybe you reduce the multiple on that, but these stocks are down 40 to 50%. The multiples have been reduced. It's hard to argue that they haven't been. And I think on earnings, they're all going to crush. And I don't know if the market's going to be happy or not. I mean, seeing AppLovin's earnings makes me really hesitant to want to get into software, even though I know, like in my heart, this is kind of stupid when AppLovin crushes by 70% and they're down 20% on earnings. Yeah, it does feel like a DeepSeek moment. I feel like the NVIDIA DeepSeek thing was a little bit more obvious. And that's when a lot of us, including myself, ended up actually building out an NVIDIA position, simply because of the idea that reasoning models would lead to more compute. And so it was kind of obvious. It's a little different. AI should help the software companies, but theoretically, yes, AI should also be a headwind in some of the enterprise workflows and additional customers these companies could get. But it also doesn't feel like they deserve to be down 50%. Yes, Twilio also has earnings today. We got 3 minutes until the close. Twilio right there, 110. That's flat on the day. Wow, 29% of you say Arista is going to outperform the most. And then the second highest is Dutch Bros. So Dutch Bros and Arista getting the nod right here. Hopefully Coinbase doesn't get hit as bad as some people are expecting. I mean, the stock is already down a decent chunk. And then you also have Draftkings later today. Oh, wow. I didn't see this headline. Did you guys experience this? 2 hours ago, Coinbase says many users are unable to currently buy, sell, or transfer crypto. Did anyone get affected by this? I don't really use Coinbase, so I didn't see the impact of this. This was 2 hours ago, around 1:30. I hope that didn't have too big of an impact, but Coinbase right there, looks like they were down a little bit during the day. Can't vibe code coffee. Yeah, so that's why we buy Starbucks, right? Where's Starbucks? Even Starbucks is down 3%, dude, but it is up 15% this year. Like, dude, again, this stat is crazy. The last time Verizon was up 20% year to date, which is up right now, 2006. It's been a while. And then the time before that was 1999. It has been a minute since we've seen that. Yes, Coinbase is having some issues. All right, seems like you had some problems here. Did you talk about grab earnings? Yes, go to the market open, go to the first 20 minutes. I talked about it in depth. I'm not in depth. I'm not selling a single share. I continue to have focus and belief in management. I think the fact that the stock's up today is a testament to the fact that the market also thought the earnings were decent. Upgrades across the board, or at least reiterations of price targets across the board. I don't love the Stas acquisition. I'm still trying to understand it. Like, I get it. I don't love it. But at the end of the day, if they're going to go EBITDA of 40% for the next 3 years, you can't sell this thing at $4.20. Like, it's still too cheap. So it can be an opportunity cost for some people. I understand that. But those earnings were not a reason to sell. It didn't break the thesis. I would have liked better guidance, but it has not broke the thesis for me. Apple right there, down about 5%. All right, folks, we got a lot of earnings. We got a lot of earnings to get into, and then we will have Jason on in about 30 minutes, and we will see what he's thinking about the technicals. Thursday, a bloody, ugly day in the markets. February 12th, 4 p.m. The stock market is now closed. All right, we got a lot of earnings to get into. Let's make the list right here for earnings. And let's do it right now. We got Coin, we got Anet, we got Draftkings, we have Twilio, we have Bros, we have Rivn. And I think we should be getting these earnings very quickly. Shouldn't take too much time to get these. Pinterest, Instacart. Again, let me know if anyone owns these. AMAT, that's a big one. Applied Materials. Airbnb, Tost. A couple of you guys reached out and said you'd like Toast. It's one of the fintech names. And then we also have Vertex today. So that's going to be important as well. All right. So these are the earnings. How did the S&P close? We closed 1.54% down, 681.27 on the day. IGV was down about 2%. AppLovin was down 19%. Apple, I don't have a good reason why it was down 5%, but it was down 5%. Apple is now below a $4 trillion company. Robinhood was down 8%. AMAT's green after hours. We'll get into those numbers in a second. The Qs were down 2%. Grab was up about 1%. CoreWeave was up 0.5%. Tesla was down 2.6%. Bitcoin down about 2.2%. Even Disney got hit today, down about 5%. Silver took a beating, 7%. Netflix also took a nasty beating, down 5%. Gold was down 3%. Then Amazon down below 200. Meta closed below 650. That was down about 2.8%. Nvidia, 186.94, also down about 1.5% on the day. All right, so earnings, AMAT's up 4%. You have Applied Materials getting a move. The numbers, it's a double beat. 8% beat on EPS, 238 versus 221. 2% beat on revenue, 7.0 billion versus 6.88 billion. Revenue is down 2% year over year. EPS is flat year over year. Applied Materials, that is your first name out of all of these companies to go green after the bell. And that is up almost 6% now. Street seems to like it. I think the guide probably is decent. We also have Wynn Hotels. That's going to be important for the consumer. Wynn is down 4%. They missed by, 21% on EPS. That's ugly. 117 versus 148. They beat on revenue by a very slight amount. EPS is down 52% year over year. Vegas is not the trade anymore. Revenue is up 1% year over year. Dude, come on. The stock trades at a 29 PE and it's growing 1% year over year. Like some of these names, I mean, yeah, they deserve to get hit. Like these valuations are not that sustainable, especially missing by 21% on EPS. Had to be something ugly that happened there. Win right there, down about 4%. Let's see if there's any reversal at all. Dutch Bros, that's flat. Rivn, that's up 6%. Rivn's green. Rivn, 1.29 billion versus 1.26. That's a beat. Fourth quarter adjusted share loss 54 versus 69. That's a beat. They are guiding for 67,000 vehicles to be delivered this year. Rivn's up 7% versus 63,000 expected by the street. Rivn is green, 7.5%. They are going to deliver 67,000 vehicles this year on the guide. Roku also with a double beat. Roku is green. Roku is up 8%. Roku beat by 89% on EPS, 53 cents versus 28 cents expected. Revenue, they beat by 3%. EPS is up 300% year over year. Revenue's up 16. I don't know what they did to get that EPS beat. Hopefully it was real and not just some accounting thing. But that's green. That is green. I don't have Coinbase numbers yet. I'm still looking for those. I think Coinbase is usually at 405, so we should get it in a minute. Let's see the other ones we are getting right. Roku again, pretty good beat on the top and the bottom. Expedia had earnings today as well. This is another travel name. Let's put them up here. Expedia is down 7%. They beat on EPS, 378 versus 336. They beat on revenue, 355 versus 3.42. Gross bookings was a beat by about $1 billion, 27 versus 26. The guide looks fine. I don't know why they're down. Applied Materials, 10%. Double beat. This one deserves it. We'll check the guide in a second, but that's up 10%. Roku's up 6%. Arista's up 2%. Coinbase is up a little bit, but no real earnings yet. It's up 1%. Twilio's up 5%. Twilio is the company whenever you sign up for something and you need to like put in a code, like a number, they send you a verification number. Twilio is the company that usually sends out those messages. That's up 3.15%. So that's not doing horrible. Pinterest is flat. Pinterest got hit pretty badly 2 weeks ago. So these earnings are going to be important. Rivn still up 8.5%. Dutch Bros is up 6%. Okay. Dutch Bros is green. I will try to get those numbers in a second. Airbnb missed by 15% on EPS. Airbnb is down 3%. They beat by 3% on revenue. EPS is down 23% year over year. Revenue is up 12%. 28 times earnings for 12% growth is not that excited, especially when you're down 23% year over year on EPS. So Airbnb, that stock now down 4%. Toast is up 3%. Applied Materials still moving. Dutch Bros, I don't have their numbers yet. Arista, I do. 249 versus 239. That's a beat. Arista's flat. And then adjusted EPS, 82 cents versus 75 cents. That's a beat. Coinbase, we got it. Coinbase is down. Coinbase is down. Fourth quarter total revenue, 1.8 versus 1.83. That's a miss. That is a miss. Transaction revenue, 983 versus 1.02. That's a miss. Total revenue missed across transaction and the top line. I'll wait for the EPS, but you have 2 misses on their core metrics. Coinbase is down. Pinterest, oh my goodness. Dude, Pinterest was already down like 40% for the year. 10% down on Pinterest. I guess the street's not happy with these numbers. Let me try to pull it up right here. Oh boy. Okay. Street wanted 981 million of revenue. Pinterest said we'll do 950 to 971. Even the high end of their guidance is 10 million below what the street expected. 11% down. Pinterest, $16.25. This company has like 500 million monthly active. So it's kind of incredible that they're not able to monetize that effectively. Dutch Bros, fourth quarter revenue, 443 versus 424. That's a beat. Dutch Bros up 12%. Net income is 30 million. This is not a company that's historically been super profitable. So for them to put a profit is a good thing. Operating income, 34 million. Adjusted EBITDA, 365 million for the guide. Dutch Bros up 10.6%. As that's green. Toast, they beat on the top and the bottom. 16 cents versus 12 cents. That's a beat by 33% on EPS. Toast is up 7.2%, 1.63 versus 1.62. They beat by 1% on revenue. Revenue's up 22% year over year. EPS is up 200% year over year. And you're getting some of that momentum from Toast. Let's get a little bit more coverage on some of these names, and then we'll keep going from there.
Let's start with EPS, adjusted EPS of $2.38, about 18 cents higher than the street anticipated on revenues of $7.01 billion, also higher, driven in part by semiconductor revenue, which came in at $5.14 billion. So just know that it's higher. Non-GAAP gross margins, we've seen some weakness with other names, but their margins came in at 49.1, so higher than what the street anticipated. And then the Q2 EPS guide and revenue guide also higher. The company putting in their statement right now, we quote, "We expect to grow our semiconductor equipment business over 20% this calendar year with the AI data center build out." So they're benefiting from that. And that's why you're seeing shares up 10.5% right now, guys.
Wow, what a pop. Christina, thanks. Christina Partsinevelos.
Okay, Applied Materials getting a big. Coinbase, I think, is flipping green here. Are we? Toast is up 3. No, coin is still red. Well, it's not as red as it was. It's trying to flip green, but it's still down. Pinterest, wow, 18%. Okay, I don't think a lot of us own Pinterest, so hopefully we're okay, but goodness gracious. Instacart's up 7. Expedia, we looked at their numbers. I don't know what the street's upset about. Numbers were good on the guide and the top and the bottom, but that stock down 4. Toast, again, relatively good earnings. Applied Materials, that's up 9%. Twilio's down 2. Draftkings, they don't have their numbers yet. Arista is up 4. Coinbase is still down 2. Let's go to Airbnb and get some coverage there.
$72 billion expected. That's the 20th revenue beat in the past 21 quarters. EPS coming in at 56 cents. That's 10 cents below consensus. Profits were hurt by a one-time $90 million tax-related expense. But despite that EPS miss, profits beat on another crucial metric. Adjusted EBITDA solidly topped expectations. In fact, it's a beat on most of the core metrics for Q4, including nights and seats booked. Gross bookings also coming in ahead of estimates at $20.4 billion. And then looking ahead to Q1 forecast. The Q1 revenue guide is a clear beat. Airbnb sees $2.59 billion to $2.63 billion versus the expected $2.53 billion. And then for full year revenue growth, they're calling for at least low double digits versus a 10.2% estimate. But shares down about 3% after hours right now, Mel.
Yeah, we'll keep watching this one, and do not miss an exclusive interview with Airbnb's CEO. That's tomorrow, 10 a.m. on Squawk on the Street.
All right, so Airbnb still getting hit. Coin still down 5. Expedia down 3. Win down 3. Nope, Airbnb going green now. So that one reversing. It was down 2. Now it's up 2. Applied Materials up 8. Draftkings still don't have that one yet. Arista had a really good earnings, up 9% right here. 2 double beats, beat on the guidance as well. Twilio, I have their numbers, beat by 8% on EPS, 133 versus 123. Revenue is 1.36 versus 1.32. That's a beat on the top and the bottom. Revenue's up 15% year over year. EPS is up 33% year over year. Twilio is down 8%. Down 8%. Oh boy, did Amcor dilute? Amcor is down 5%. Amcor announced a secondary offering of 10 million shares. Well, this is very similar to what ASTS did yesterday. The stock is up a lot year to date, and these companies are going to take advantage of that. Amcor right there down 6%. Now it kind of makes sense why it was down 8% of the day. Someone probably knew. Amcor right there. It looks like they are announcing dilution of 10 million shares. What price? I don't have the price of that yet. We'll see if we can get those details. But that stock is down. I mean, same thing with ASTS, right? That stock was up a lot from the bottom of 2025. It was $30 in September of 2025, got to almost $130. So these companies are going to take advantage of that in this market, especially if they think there's volatility here. We'll see what they're using the money for as well. I mean, if anything, they're probably using the money to expand the collaboration with TSM in Arizona. But that stock down 6%. Coinbase still down 3.7%. We'll talk about Apple in a bit later, but that stock did get hit 5%. I mean, there were a couple of things about the iPhone, but I don't think those are enough. I really think Apple sold off because the whole market sold off. I mean, Apple's a big part of tech, and then tech sold off. Apple usually gets hit. Dutch Bros is still up 15%. Dutch Bros not slowing down. That one holding up. Coinbase still going down. Twilio down 7%. Draftkings down 2%. I don't have the Draftkings number yet. Arista's up 5%. Airbnb is up 3%. Vertex is flat. Applied Materials is up 8%. And then Instacart is also up 12% on the day. Toast now, I don't want to be the one to say it because it's so cliche, but it's looking pretty toast after hours. 8.8% down. It was already down 6.7% during the day. So this one now getting hit. Let's get some more coverage on Expedia and Rivn, as those two names also are getting smacked.
Share adjusted against the street expectation of 336. A revenue beat as well, 3.55 billion, expected 3.42 billion. In fact, on almost every metric, Expedia is outperforming. Fourth quarter bookings, adjusted EBITDA, booked room nights, revenue in their direct-to-consumer business, a beat. In business to business, a beat. Now, they say that they're raising their dividend by 20 cents and declaring a quarterly dividend of 48 cents. But still, look at the shares down 7.5% right now. So there you're seeing a big shift. A lot of focus here on how much AI is interfering with the way they do business. We'll be listening into the call. And again, the CEO on Squawk Box tomorrow.
All right, contestant.
58 cents a share, so a smaller than expected loss, with revenue coming in better than expected at $1.29 billion. For the fourth quarter, they had an adjusted EBITDA loss of $465 million. Compare that with Q4 of 24 when they lost $277 million. What's the difference? A big drop off in terms of EV tax credit sales. That clearly had an impact in the fourth.
Rivn up 12%. Again, they did beat on the guide, and although free cash flow is negative, Street is happy with the beat with 67,000 vehicles guiding for fiscal year 2026. Let's get to Pinterest and see what was the issue here.
Down about 18% as the company misses on earnings, 67 cents rather than the 69 cents expected. Revenues of 1.32 billion, pretty much in line with the estimate of 1.33 billion. Stock now down 19%. Company outlook is also weaker than expected. Pinterest guiding to revenue in a range of 951 million to 971 million, below the 980 million estimate. Monthly active users, 619 million. That's 6 million more than estimated, with average revenue per user a bit lighter than expected. It was stronger in the US, but lighter in Europe than anticipated. Back over to you, Melissa.
All right, down 19% on Pinterest.
That's kind of crazy, dude. 619 million users, and they are missing estimates. I mean, it goes to show that either their user base is not monetizable, which it should be middle-aged women, which tend to spend money, or the product is just not good enough to convert. Pinterest right there down 19%. Rivn up 13%. Dutch Bros up 15%. Here are the numbers on Dutch Bros for those that missed it. They beat by 70% on EPS. Again, they were not expecting to be that profitable, but they came in better than expected. Then 443 versus 424 million on Rev. Rev's up 30% year over year. It's almost growing like a tech company. And EPS is up 143% year over year. Draftkings, do we have that? Oh boy, that's down 12%. Oh my, not pretty. DraftKings misses EPS by 12%, 36 cents versus 41 expected. Revenue, they missed very slightly, 1.98 versus 1.99. Revenue's up 40% year over year. EPS is still up 157% year over year. I wouldn't be surprised if this gets bought up. They probably said something that's making the street a bit upset right here. I don't know if it's just the miss on EPS that's causing this. There have been many questions about DraftKings due to the rise of prediction markets. I don't think DraftKings necessarily goes out of business, but I do think it is more of a headwind if people just start trading on prediction markets over sports books. But DraftKings right there, down after hours on a miss for EPS. Coinbase, are we recovering a little bit? Coinbase, let me get the EPS numbers because I still didn't get those yet. Again, Roku had a double beat. Okay, so something's going on here. They missed EPS by almost 400%. They lost almost $3 a share. Something. Cactus, you know how they lost almost $3 a share? Did they write down a crypto investment or something? How do they lose that much money? And then again, they missed on EPS by revenue by 3%. So ugly day to report earnings, folks. And once again, we are seeing the trend of not earnings necessarily being bad. Although today, I'm not going to lie, today's the first day inside of the earnings cycle where these earnings are actually not that good. Today's the first day in Q4 where I'm some of these companies, just not good. DraftKings, not good. Coinbase, I don't know how they're losing this much money, but Coinbase is more tied to crypto. Win is not good, but I feel like Vegas, that was obvious. Now, Roku did great. Expedia, I think, did great. Toast, I don't know this business too well. I don't know why the street's taking it down 13%. Instacart's up 16%. I've still never used Instacart in my life. I guess they had a good earnings. It's kind of mixed, I would say. It's definitely not all of them are bad, but some of the companies that you didn't expect to, I don't know. Pinterest has already had a really bad year. I don't think I expected them to blast expectations away, but the fact that they missed is what makes it that much worse. And that's why it's down 20%. Now, again, some of these companies could go to zero. It doesn't really matter too much for the broader market. They're not the most important companies. But today is one of the worst days for these earnings. Airbnb at least making a move. That's up 4%. Instacart looks like they beat top and bottom. Looks like they beat Coinbase. I'll check that in a second. Coinbase revenue guide for Q1 on subscription and services, $630 million. Adjusted EPS. Street thought it would be 86 cents. They're guiding for 65 cents. Which is also not the best for Coin. That stock is now flat after hours. Applied Materials, that's still up 9%. Instacart revenue of almost $1 billion, $992 million, up 12% year over year. They made $81 million of profit. That's down 46% year over year. That's a little confusing for that stock to be up that much, 13% after hours. I guess it was better than at least what some of the street expected on EPS. DraftKings still down 10. And then Twilio, that stock's still down 4 here. Okay, let's see if we can pull up some more of these numbers. What about Apple? That's a good question. What about Apple? All right, so from my understanding, there were a couple of headlines today about iPhone growth slowing down. I really don't think that's the reason why Apple got hit by 5% today. I think Apple was caught up in the broad-based tech sell-off. It kind of came out of that idea of safety. Counterpoint Research this morning said Apple's iPhone was the only smartphone to see growth in China, which again, although other pieces of analysis say iPhone growth is slowing down, China is a really important part of their business. So the fact that China is growing, you would think the street would think that's optimistic, but no, that wasn't the case. And I think that is part of the reason why Apple got hit. Apple got hit due to risk off for CPI reports. Well, CPI, yeah, that honestly, that could have affected everybody or every stock today. But iPhone in particular was weird. Just again, look at this. Counterpoint Research, they're saying Apple was one of the only major phone brands to grow in China. iPhone sales were up 8%. The whole market fell 23%. And now they're tied with Huawei. There were some conflicting articles I saw today around overall phone growth being down for the iPhone, but I don't know if that's enough to take Apple down 5%. But that stock did get hit. Anet, that's up 11%, still moving pretty nicely. Toast, 14% down. Dutch Bros, 14% up. Rivn, 14% up as well. Coinbase is green slightly. Now it's red. It's up by 50 cents. It's going back and forth, but at least it's not tanking. It got to 134 at one point. Pinterest now down 17%. Coinbase expects slight headcount growth, cites lower crypto prices and staking rates. Coinbase posts $667 million loss, sees revenue tumble like 20%. This was also kind of expected though, right? It's like Bitcoin crashed. So did Ethereum. So that's a really big part of their business. As much as people want to say HOOD's a crypto play, like Coinbase is actually a crypto play. So obviously that should be creating some headwinds for them, but the stock was already down a lot. Corsair is up 40%. What is the ticker on this one? Corsair stock. CRSR. This is Corsair Gaming, right? Why is this stock up 40%? Granted, they're a market cap of 500 million. So anything good probably could have taken this higher. I don't see any headlines. I would imagine they had earnings. I don't see the numbers here. That stock up 40%. Corsair makes memory. This is a memory play? What? Corsair gaming revenue 436 versus 422, posts 26 million of net income. Dude, this is the dumbest market. It's not the dumbest market, but it feels like the dumbest market. This is a memory. Oh my goodness, dude. Can Robinhood become a memory play somehow? Can we get into the memory business? Can Tesla and Palantir get into memory somehow? Dude, when do they start making memory for gamers? Goodness gracious. Okay, the street likes it. I mean, the stock trades at 0.3 times sales, so it's not necessarily expensive. They're profitable. And now they've got the memory bandwagon associated with them. They used to put memory in PCs, always, forever. Okay, I did not know that. I genuinely did not know that. I did not know that was the case. It's a spin-off from Micron. Well, how come no one was talking about this if all of you guys knew they were a spin-off from Micron over the past 3 months? How come no one said, hey, let's look at Corsair. Maybe it's an undervalued memory play. Because I didn't know that. I didn't even know what the Corsair ticker was. But apparently all of you guys knew. I had Corsair memory in 2000. All right, well, in 2026, we kind of needed to know that. Goodness, dude. RAM, 35% up. S&P moving up a little bit after hours. Amcor still down 6. Instacart up 12. Pinterest down 17. The RAM in my computer is actually Corsair. Dude, I mean, in this market, sectors and thematics are winning. And if you're in the right sector and thematic, I guess you're going to catch a bid. And at least that's what's happening with Corsair. I want to see a quote from their CEO about memory or something versus the expectations. Because did they have like a SanDisk type of earnings where they just absolutely blew things away? They grew 12% last year. I mean, that's not really a memory type of earnings. 30% increase in gross profit, 84% increase in adjusted EBITDA. They grew 6% in Q4. I want to see the guide here. What the hell did they say to go up 40%, dude? Goodness. All right, well, Corsair, that's up 40% after hours on this memory thematic. Let's get to a couple of other headlines. Let's do this White House headline, and then in about 2 minutes, we'll get Jason on, and we will get into the technicals.
Tillis is currently blocking that from going through until the criminal investigation into Jay Powell has completed. And yesterday, there was the idea floated that, hey, maybe instead of the DOJ doing this investigation into Powell, it could be something that Congress could do, that the banking committee could do. But we just had Senator Tillis reaffirm twice today now that he needs to have this DOJ investigation wrapped up. He's not doing the one-to-one. He's saying, hey, look, if banking wants to investigate these overruns, we totally can. But the important thing is that the criminal investigation, which only the DOJ can do, ends. And until then, he will not be lifting.
Okay, so basically Congress says we're not investigating Powell, no matter how much you guys try to make us do that. Remember, that's for the whole $2 billion renovation thing that Trump basically created an investigation or tried to create a probe for an investigation 2 weeks ago. Draftkings earnings, here are the numbers.
billion. That's in line with what the street was expecting here, Melissa. But it's really the revenue guidance that's coming in light at 6.5 to 6.9 billion. The street was expecting 7.31 billion. And EBITDA is a beat here, 343 million versus the street's expectation of 269 million. Monthly unique players, this is coming in pretty light as well at 4.8 million versus what the street was expecting, 5.26 million. The big question in all of this is going to be, are prediction markets taking a big share away from Draftkings? Draftkings, of course, has its own prediction business. We're going to hear on that call whether Railbirds and its tie-up with Crypto.com might be taking some of those profits away as they reinvest in the prediction business as well. But that's really the focus here for investors as we see those shares down 10% after the earnings report. Guys?
Yeah, Contessa, thanks. Contessa Burr will be speaking with Draftkings CEO in a First on CNBC interview later on this hour.
Roku earnings also out. Julia Borston has those numbers. Julia.
Hey, Mike, Roku beating on the top and bottom lines. Earnings of 53 cents per share, well ahead of the 28-cent per share estimates. Revenues 1.39 billion, beating estimates of 1.35 billion. You see shares now up over 9%. The company also guiding to first quarter revenue of $1.2 billion, ahead of estimates of 1.16 billion, and also guiding, revenue and also full year revenue of 5.5 billion out of the 5.34 billion estimated for the full year. Also want to note that we will be doing an interview with the CEO of Roku, Anthony Wood, tomorrow in the
24 million revenues versus the 425 estimated by analysts. Same store sales up 7.7%. That's a huge beat, higher than the estimates of 4.4% growth. EBITDA also at 73 million, much better than the 60 million estimated for the quarter. CEO Christine Barone saying, quote, this strong top line performance driven in increases in transactions and a value proposition that clearly hit home with our customers, an unmistakable indicator of the magnetic strength of the Dutch Bros brand. So this is just another coffee shop seeing transactions growth in addition to Starbucks. So 3 names now this quarter, if you're keeping track in the restaurant sector, showing traffic growth: Starbucks, McDonald's, and now Dutch Bros, all very different value propositions too, guys. Back over to you.
Okay, so some of the restaurant names have been doing very well compared to the tech names. 13Fs are not out, by the way, for those that are asking. I think next week we will officially get 13Fs. The only thing that we got was Bill Ackman's new position in Meta yesterday. And so there you go. Dutch Bros, Starbucks, McDonald's, those are the ones that have actually had a relatively okay earnings. This is the recap for today. Toast is down 8, Airbnb is up 4, Vertex flat, Wynn down 2, Roku up 10, Expedia down 3, AMAT, semiconductor name, that's up 10, Instacart up 14, Pinterest down 17, Rivn up 14, Dutch Bros up 14, Twilio down 4, Draftkings down 14 now, Anet up 8, and then Coinbase flat after hours. The other headline we didn't talk about, I'm just going to mention real quick, is if anyone noticed the transport stocks were all down today. I didn't get too much of a time to see exactly what happened, but this was one of, take a look at the stat. This was one of the worst days for the Dow Jones transport sector versus Dow Utilities since the Great Depression. Why? Apparently AI. There's some argument that AI is going to take over transports. I really didn't get that deep into it. I'm trying to do some more research to see what happened, but the headline was AI is going to hurt the transport names. You saw Lyft get hit pretty hard yesterday. Yeah, one headline right here. A new tool called SemiCab from AI company Algorithm Holdings has made trucking companies the latest victim of the market's AI jitters. There's an emerging debate around open source automation agents such as Moltbot that offered increased potential to automate routine back office tasks and help equalize the technology playing field for smaller operators in the transports and logistics space. Again, I feel like that will be a tailwind, not a headwind for the overall Dow Transport Index. But at this point, it's becoming comical how the market thinks AI is going to take over everything. But at the same time, NVIDIA is flat. And last time I checked, NVIDIA is kind of important to this whole AI thing. But that's what we got going on. All right. It is not Tuesday, but we missed Technical Tuesday because of Robinhood earnings. So we are going to do Technical Thursday today. I have a hard stop at 6 o'clock. So we're going to have an hour and 30 minutes. We're not going to get to all the audience requests, but we're going to try to do some of the big large cap names that people care about. Obviously, the S&P 500, the Qs, and try to get Jason's perspective on what is happening technically. For those that don't care about technicals, maybe stick around and see if some of this male astrology offers a little bit of guidance for why the markets are red. And for those that do care, we're going to try to get through as many tickers as we can. All right, here we go. It's time to roll the intro.
What's up, man?
Not the market.
I mean,
How are you?
we sure? Some of the market, right?
Some
Do we have
parts of the market
anything?
are up.
What was green? I don't know.
Coke was green.
Coke was very green today. Coke was definitely green. My Rivy's green after hours, but
Rivy is green after hours.
Rivy's green. My Rivy's green after hours. It's not. I would like to see a little bit more, but beggars
You know
can't
how
be
many
choosers.
people wanted Technical Tuesday? I mean, it's markets like this where your stock, every other stock goes down, your stock is a crescendo. It's just going straight to the moon, and people need it. So yeah, let's get into it, dude.
Yeah. Oh,
Let's start with SPY. I mean, I think you can take 5 minutes or you can take a little bit longer, but people genuinely are curious where you think we are in right now in the market cycle. And
well, I know we're short today. I was gonna do a little announcement or like a surprise.
Oh,
but
I forgot. We do have
Let's not do it. Let's not do it because we're gonna be short. It's short today, so we'll save it.
But this is a good announcement. I literally just remembered he does have.
We don't. I mean, it's okay. It's not that big of a deal.
Do we save it for next Tuesday?
We could, because I mean, I need a poll. I need some back and forth time.
Yeah, let's save it.
And since
it is such a good announcement that we should save it. We're gonna make everyone mad by not saying it, but guys, trust me. Wait till next week.
That means that you have to come back.
Yes.
Which it's Thursday today, so Tuesday is not even that far.
It's not.
They're like announce, tell us. Nope.
It's a personal thing. So you
gotta come back. What do you mean it's a personal thing? It's clearly we are public entities, basically. So we don't have personal things.
That's true.
But
That's true.
So there's that. All right. So this is a chart. I'm gonna start the timer here since Sir Yapalot over here talks too much. We have to have an egg timer. But this is a monthly chart of SPY. So today I kind of thought, well, maybe we should put things in a little perspective here, since I constantly get this, are we in a bear market? Blah, blah, blah. I'm like, listen, are we due? No. Well, I mean, yeah, we could be due for a pullback at any given time, but this long term, look, it's not a discount yet. This is where we are at the index level. Some individual stocks not doing that great, but overall, as long as we're holding this for now, it's not a big deal. But if we do get a pullback, let's just remember the spot, like the market overall, it's gonna work out. And if we do get a big dip, maybe we'll buy a little bit, but I would love to get me some big dips later on. We're not there yet.
You don't think it's a bear market right now?
You asked me, months ago, multiple times, are we due this year for a correction? Yes, yeah. Absolutely. Here's the market, right? We have not had a red month in like 1, 2, 3, 4, 5, 6, 7. I mean, basically a year straight of going up. So we've been absolutely spoiled. Can we pull back a little bit? You betcha. So yes, absolutely. In the meantime, if you can't get yourself around that, that's fine. We've been going through, how do you do some protective call, like cover calls, things like that. I think that's the way to go in general. But it's gonna be, as long as we're holding at least sideways for now, it's gonna be a stock picker's market. Like, call it a K-shaped economy, if you will. I don't see a V-shaped recovery coming right now. We have big news tomorrow with CPI, which is the market's favorite economic data point. Not mine, but it is the market's. So that said, we are very heavy at the index level, which is kind of rough because some of our stocks, my hoodie, whatever, are down a bit already. And so next week, we'll know a lot more. Right now, here's what I'll say. As a trader, a trader, not investor, a trader, wears a lot of different hats, but we kind of like our specialty is to identify waves, if you will, to surf. And we get on, we ride the wave, then we get off before we wipe out. And, we had a big wave to the downside. We rode a like 24, 36 to 48 hour bounce to the upside. And then we had a downside move, and I'm getting off right now again. So since last time we talked, I said, hey, maybe we'd be doing some counter trend trades. That was exactly what we got. This is our counter trend type bounce. I'm coming off the reversal of that bounce right now. And at the end of the day, we actually haven't gone anywhere. So is the market gearing up for a big move? The answer is yes. Decisively, yes. Right now, I could tell you, it actually looks like it's going to come down. But tomorrow is really going to know. Tomorrow, we're really going to know, and mostly next week. So charts aside, it's kind of a fundamental event tomorrow. So it's a big deal. This looks heavy, but we're not seeing massive selling just yet, not across the board.
So we need CPI, and we also are due for a correct. It's been 3 years, right? We're due for that kind of.
I don't mean bear market. I mean like a corrective kind of pullback, something small. In retrospect, small.
And that would be like what, 10%?
15. Yeah.
Okay.
Yeah. And which sets us up, the whole thing sets us up for the eating season, which would be this year, September, October. This is the dip to buy. It's this year. It might not be right now, but it's this year, Q3, Q4. This is the dip that you absolutely want to buy if you believe in the cycles of the market. So
do you think the 20% or 30% April lows we had in 2025, did that count as the correction?
Yes.
Okay, so do you think
was it 2025? I got to go back. You're gonna mess me up. I'm gonna go over time though.
No, that's okay. It was 25, but I guess my question is, do you think another one is warranted if we already had one last year?
Why? Look at the charts. You're talking about this 2020. Yeah. So I'm talking about exactly this, right? And so, you could say exactly this, like we are coming off of. So I'll go over a little bit in 2025, and I think that's a perfect thing to look at. Like you have, your uptrend, higher highs and higher lows.
Yeah.
After this 2022 nastiness, I'm not talking about 2022, but you have a pretty solid trend in 2025, right? Higher highs, higher lows, higher highs, higher lows across the board. And then you get a little bit of a stall out, right? And then in this last moment before it actually comes down, like this last little blip, you do have actually a higher high. And this is a weekly chart, mind you. So it takes a while. And right now we're very much in that same kind of situation. So if you were to ask me from a technical perspective, should I be cautious for something like that? The answer is a resounding yes. If we have something like that. So does that actually pull us back? No, it actually takes us to, if I got that kind of a move, something exactly like that. If we were to get that. But I need a real trigger. And so as a trader, what I can say is it looks like this may happen, but nothing on the chart has told me to go trade for that. So when I say a trigger, what we're looking for is like multiple candles. Again, this is a weekly. I need to see us below 670. So if we're below 670 in strength, then this is definitively, without question, to me, happening. But are we there yet? No. Do I want to be cautious of that? Yes. So that then kind of puts me in the place where, is this a great spot at the index level? I'm just talking SPY right now to add long-term. It's not. But if we get this, it absolutely will be. Tomorrow, we'll see if it happens in strength, but for right now, it's not happening. So I would actually even say 668 just to be sure. And even a little dip into 668. Now mind you, if that is the level that I'm telling you, below that can get ugly, what you guys as investors, if anybody's out there that is an investor right now, should understand is that that is the level that we would really get a bigger trigger to go short at the index level. But that means that that is actually support. So if we have like dips into this level, I don't expect that to break without a big reason. Does this make sense? So for right now, this area, that actually means that's where I would prefer to be longer from a trading perspective. I would think that we get something like this and we could actually bounce back up to the highs just for this trading range and maybe even still go sideways for a while. But this would be at that point even a counter trend type move. But I don't see us falling off a cliff right now. I think next week we'll have a lot more clarity on that. But I would say, hey, cautious, more cautious than optimistic right here, right now.
Okay, let's do another big macro asset before we get into the specifics.
Dixie. We should do Dixie.
Yeah, let's do Dixie. I was gonna say Bitcoin, but both are good right here.
Yeah, so this is so Dixie is like the dollar index. It's a basket of currencies measured against the dollar. It's not the dollar itself, but this is kind of like your debasement trade, if you will. So the part of the market that's working, and I tweeted about this. Actually, I'll pull it up. I'll pull up my tweet in a little bit because I think it summarized the market pretty perfectly right now. This is a weekly chart of the dollar index. So we are actually kind of going down, but we're going down slowly. This is like your debasement trade, things like this. Here's what I'll say. This is an important chart to watch because in a bear market, in a legitimate bear market, what we see is we see not a flight to quality. We don't see a flight to quality in a bear market. We see a flight to cash. And that will legitimately show up in this chart right here. So if you see the dollar breaking out to the upside, that's actually when I would be really cautious. But the fact that this is not happening makes me lean towards more of just like, here's a correction. I don't need to press any upside bets right now. You know, new money longs, the risk reward is not great. But this coming down, this dollar coming down is actually, there's a positive aspect to this. This is your debasement trades. This is some of your commodity things, whether it's copper or whatever. Our GLW is doing fracking amazing. That thing is, I wonder if it's going to be the next SanDisk. Flight to international with D Ptolemy tube, possibly yes, right? But what it's not definitively right now, it's not a flight to cash. And in a bear market, we're like, dude, sell everything and run. I'm holding my cash. I'm not seeing that right now. So I think that from a context perspective is pretty important.
Okay, let's do Hood next. But before we do that real quick, I know a lot of people are asking about Apple. Let me do this quick update on Apple and then we'll get into Hoodie.
Okay, I am gonna have to do.
Yeah, that's exactly right. And besides the overall tech sell-off, Mike, there are two headlines recently that kind of caught my attention on Apple. So yesterday around this time, we got that Bloomberg report that big AI update to Siri that incorporates the Google Gemini technology, that has been internally pushed back. We were expecting it to launch in just a few weeks' time. Now, according to Bloomberg, it's not going to come out until May. And even then, it's not going to be all the features necessarily that Apple originally promised nearly 2 years ago. So that is causing some doubt and worry around Apple's ability to get this out the door. Though I will say, Apple says they will do it as promised by the.
So there you go. Apple's worst day since April, Siri delay, and the Tim Cook FTC letter.
I did see this. I did see that Apple did not have a great day today. But here's my one takeaway before we get back in the charts. But it's this right now. So yesterday's NFP at the headline was a beat, 130 versus 70 expected. If you don't have this is on my timeline. I mean, this single tweet was like, for sure, sums it all up. Someone said, you won't see the Dixie till it's too late. There's truth to that. But in general, economic data is unreliable in real time, right? Like if anybody was around 2022, the data actually said that there was a recession and then they revised it away. Like by the time the data was saying, hey, it's bad, honestly, that ends up being the time to buy, because what happened was that the market bottomed in October 2022. The second that those two negative GDP prints were coming, and then like like right after that, after the market was already recovering, they revised away the 2 negative quarters of GDP, which is like the technical definition of recession. And they're like, oh, sorry, my bad, it never happened. This time, from yesterday's report, this is what's got the market on edge right now, is that it's the opposite. So we were saying that it's the revisions. It wasn't about the single headline. The revisions was big. Revisions, massive revisions, taking all of 2025 growth down to 181K, which is near recessionary levels, historically speaking. And the moment that came out, boom, we go 94% of chance of no cuts at the CBOE. But you look around and what we're seeing, we saw TSM hitting new highs. I haven't looked at it since, but this one sentence literally sums it up to me. IGV is still getting hit. The market acknowledges that hardware spending is very real. And what we're seeing around the rest of the market in terms of IGV is the question of, you just mentioned it earlier, will this AI spending, will the spend pay off for the SaaS companies, for the software companies that are actually the ones spending the money on this hardware names? There's no question in the market of whether or not people are spending money. That is real. It's acknowledged. We see it in the charts. The question is only, is the cash flow that some of these large companies, think CRMs, think Adobe, that used to demand multiple PE multiples, Apple-like PE multiples, is that still reliable? And the fact that there is that single question still in the market is the only thing that's really holding us back right now. So I think if you're looking at stocks and if you're holding stocks, just think of it from that perspective. The question that the market is asking right now is that it's not an if this AI spend will pay off. I don't think it's an if, but it's more of a when. And will they spend too much between now and when it does eventually pay off for it to not be worth it for them? And how does that affect their cash flow or growth ability in the near term? So that's it. All right, what was the next one?
Speaking of AI, real quick, OpenAI just put out a memo. DeepSeek is distilling U.S. models to gain an edge and has an ongoing effort to free ride on U.S. innovation. Okay, it looks like they're upset at China. Let's do Hood. What are you thinking on Hoodie?
So we've been calling for this low 70s for a long time. Hood is literally trading at $71.78. Where this level comes from, I'm just going to drop this down to a 4-hour chart and I'll play the timer. It's this $28 low to this 150 high. This is our chart. And this area is kind of like the area that I like to target. Now, it's at the area, and I'll talk about this. Two things have to happen. I want to see this definitively hold this general area. I think that Robinhood can easily go in a whole best case scenario. Robinhood stays sideways for a while between 91 and 70 or $90 and $70. I think that would be perfect from here. But does that happen? We're still TBD. So post earnings, $69 and some odd change was that after hours low, 68, something like that. This is my level. But what I need to see when something hits my level, I need to see buyers step in. If we lose this, guys, it's got a 4 handle on it. So I'm not going to add substantially until I see that. I hear people talking about 60. I don't think 60 has any kind of relevance here whatsoever. I think it's like as close to 50 as possible, and potentially a little bit lower. But here's the deal. On earnings, and I'll zoom in just a little bit. Let me go to a 30-minute chart because you can see this a little bit better. This is the low right here. It's 68. Can you guys see this? 68.83. If I inverse this chart, and you might see this better, I just flip the chart upside down. The way this works on earnings, post earnings, is that everybody gets one chance. If this had gone up, everybody gets one chance to make a new high, right? In this instance, the real chart is like this. But since everybody's naturally bullish, we'll flip this upside down so it looks easier for you guys. You get one chance to breach that post earnings like high or low, whatever it is. And If it doesn't do that, let's say if this was going up, if it didn't instantly go up like that, it's not going up. I can say that. We'll show you charts like that a million times over. But right here, right now, Hoodie is doing the same thing in real time, but opposite. So we have a low. Amazon's doing the same thing right now. We have a low. It gets one shot to make a new low if it wants to go lower. And we'll find that out, honestly, tomorrow post CPI. So if it's going lower, I would expect this $70 area to actually become new resistance. But for right now, I don't have that reason to say we're going to go lower yet. Quite frankly, if I see this holding through this week, like over 76, and I'm not trying to snipe the lows, I could care less about that. As a trader, that's not my job. But I want to see that I'm in the clear. If I see this over 76, I think that we can get another bounce. But again, because of where we are, I think that ultimately Robinhood stays in this kind of general box. That would be best case scenario, up to 90, down to 70, and create a net new investor base here. It's not going to be until we're well over this 92 area that we are going to start filling some upside gaps. I can go all the way up to 110 and still be in trouble. So that's my one caution. And like 110 up in here, that's primary resistance. So you could still get a bounce. You could get a 50% bounce here, probably from here. This is 50% up to 107. I could get a 50% bounce on Robinhood from right now and still be in a downtrend. So that's the one caution. Is this a tradable zone? Absolutely. But from here right now, just know, I don't know that it's going to go lower. I think this is probably it for the moment, but CPI is going to tell me right now. And if we do go lower, I just gave you guys the numbers, close to 50 as you can. That's the next time I'll actually add. And so I will add at that point, but not before. So I've already done my ads, by the way, in this little box. I already bought. And that's it. I took my shot. I'll let it go. It was a good spot, technically speaking. If it doesn't work out, then, I'm hoodie for the long term. So I'll buy it again lower. And I'm not buying back my cover calls.
So at its core, you think if it loses around that 63, 65 level, 40s is much more likely to see.
It's literally the earnings low.
Yeah.
So that's 68 and change.
Yeah.
Which, there was a little gap down there from that, it gapped up overnight. Yep. And if I were to be like overly precise, which I don't want to do, but if I were to take this and we call this a session gap, that's a pretty solid hold right now. So I don't have any inefficiencies in this chart at this exact moment. I'm actually okay with this, but the reason I'm not adding any more is because of CPI. I just don't know. So to take this here now would be more of a gamble to me, since I don't have the odds completely stacked in my favor because of CPI tomorrow.
Okay. Palantir?
Very similar. So Palantir 165 was that kind of support area up here. 166 was the lowest level support. Kind of bounced there after earnings. We talked about this on the show. This was a Tuesday, literally right here. And I think this was a Tuesday, and we kind of said it straight up. It's not a bounce to get excited with. And we're kind of like entering this down channel right now. I think in general, I think that we're towards the low end of the channels that the stocks are making. So you could see bounces, but I just want to be crystal clear. I've been using this term counter trend bounce because the trend is lower, but 150 is now your new level. And that was support. So it's these buyers. So these buyers here, whoever bought in there, they're now underwater. So if you were a new buyer down here, and if the market's turning over, you can get a bounce on Palantir, which is a tradable bounce to the upside. What I'm trying to say is that this is like very close to the hole, right? So I don't want to put new shorts either. I think we could get a counter trend bounce for 36 to 48 hours. It could be 48 hours of glory again, but I just want to caution that this 48 hours of glory that we might get might be violent in your face ripping type bounces. but they might not even make it all the way up to the real support levels. Just one more bounce, and that ends up ultimately getting sold into one more time.
Which is basically what happened Monday and Tuesday, right? It was a faith ripping.
Yeah. So think about it this way: across the market, if the market is turning over, like meaning like if the market currently the market's in flux, right? There's about to be a shift. If we do start going down, think about it like 5 days a week, 3 days down, 2 days up. So that's all that needs to happen. 3 days down, 2 days up. The 2 up days end up ultimately being weaker than the 3 down days that are stronger. So, but in those 2 days up, you can get some pretty violent short covering rallies, which usually happen on Fridays. So the markets don't typically bottom on a Friday or the end of the month. It's just not normal. So tomorrow, I could even expect, a big short covering rally, but I don't expect it to really hold, even if we have a great day tomorrow. That's why I'm saying this. I'm just being cautious that any bounce that, as violent as it might seem, it's still sus, like it's suspect, because we've come so far. And so a lot of these things to have broken like trend, Palantir included. But if you do see 150, it's essentially these lower highs. We have a series of lower highs and lower lows. It's what it is. There's no reason to argue about it. It just is what it is. And so if we see a lower high, that could be like 160 even, and I'd still be in trouble. So for now, if you're investing, I'll just tell you what I'm doing personally and what we're doing in my group is that we are currently net short a lot of tech and software, net long a lot of these safety trades and commodities and stuff. But if you make profits on trades to the downside, we just take that profit and you put it in your long term. And you build a little actual wealth, and that is the purpose right there of trading, right? Like my trading account is like 10x my trading account, big green, but my investing account, big red. But that little green just goes into the big red later on, right? And so that's all that's happening.
Right. Can we do some of the memory names together? Micron, SanDisk, and your overall thoughts on this sector?
So Micron, SanDisk did. So do you guys want the levels here, or are we good? So,
yep.
Okay, yeah. So 115 was the level that we outlined would be the next low, but we can. That's your support here. It's sub 125. It goes as deep as about 115. It's not a lot more, so we're close anyways for this move. Micron is tough. So Micron here. We went over Micron and SanDisk, I think, last time. And what I will say is Micron also has lost its near-term uptrend. So near-term meaning post-earnings. So here's the post-earnings trend. You got a little bit of a pullback. I said that it could go as low as 300. We got to 362. As low as 300 is what that is, it's like me taking that prior consolidation. It's 328. I would actually stay there and say, hey, look, I probably, the thing about Micron is that this is still where the market is working. This is still working. The market's not really questioning whether or not people are buying memory. But near term broke trend, this can continue to go higher. Today's 394, again, not actually a bounce to get super excited about. I think Micron at least goes into a rest phase right now and takes a bit of a breather. So near-term trend is a pause. It's not a long, it's not really a short. I mean, it could be a short, but you down to like this 380s. I would be more interested if I saw 300 on this. I would probably be actually interested, like as close to 300 as I could. But again, I'd be interested. That doesn't mean I'm going to buy it right away. It means that I would have to start looking at people. But if this is over 440, which is the new resistance, so we now have resistance up here, then the bulls have given up and it's just going back to the upside, and that could be in the 520s if it reclaims this trend.
Okay. NVIDIA, what are we thinking about this one?
Nvidia,
which is kind of held up from the Thursday lows of last week.
Well, today's price action on Nvidia I don't really like. So we know that 193 is this general resistance. Sorry, I didn't know if you were going to be. I'm probably busting your balls, dude. Every time, yes, last week too. Like every time it was like, I like this one. I'm like, no.
Someone in the chat was like, if Jason's gonna be bearish, please don't have him on today.
No, I like certain things, but like I think this is a great opportunity to learn trading also, honestly, because like even if we do get a little bit of pullback on things like this, dude, the profits that we make from a trading perspective are massive. We're getting like 500,000% returns left and right. I can't even count right now, but like you just take that money and you compound it in your investments. Like it's a great time to be a trader. But anyways, this is near-term resistance. And we opened up at that resistance wall one more time today and we rejected. So here now, I think we see 185s again, that center line right here. Again, pending CPI. If I just had the charts on me right now, the chart without CPI looks like this. But if this is over 193, then I'll shut up, right? Or 194. Then I'm shutting up, and this is just going to go back up to the highs, and we'll see a two handle on it. But this morning is actually a moment that if you are worried about it, that would be a moment to take measures in terms of like selling some protective calls or maybe collaring the stock. But only if you're worried about it. If you're not worried about it, who cares, right? Just buy more later. But later is still in this low 170s, high 160s is still where this would be for later. Because if this takes a shot, 1, 2, 3, if this takes a 4 shot at the lows, that was always like my concern is that if it does, that's how you get to that lower level. So looking for this needs to hold, basically. This needs to hold. And the fact that it didn't push through now is more cautious than optimistic of something like that potentially happening. But again, it's pretty clear line in the sand around 195. We have somebody selling. I don't know who it is, which one of these guys it is. Somebody's selling at 195. And anytime we get there, it's like we get hit with a wall.
Do you think earnings, your gut based on the chart, not knowing the earnings, do you think we need to crack 200 for this to be secure and good to go on earnings?
200 is not good enough. No, you need to see 230s or something bigger.
So you think if we get a gap up to 200, it's easily going to get rejected?
Absolutely, yeah. Yeah, it would 206. So you have a gap that's still available to get filled on something like earnings that's 206, that's a short spot. Because you have people, it's not a short spot. Like, so when I say short, I'm talking very short term. We're, back down to 190. So if you saw something like this, I wouldn't get excited. I would expect something like this. And then if we saw buyers show up, so once we eventually get over 195, because it'll probably happen, right? Time heals a lot of things. Time heals everything. And so if this chops around, maybe you get wicked out, maybe whatever, maybe it comes down. Eventually, it will get over 195, honestly. And this level that we're looking at, this 195 right now, is becoming a large, like almost institutional type level. It's a massive level now. And so when we do break over it, eventually, it's going to look something like this. And it'll explode. 207, 210, whatever, it'll probably come back. And when it does come back, and that's what I mean by short, it'll come back. That's all I mean. What I want to see is the people that were selling at this 195 area, I want to see them start buying and I want to see them start covering their shorts. And in that moment, that's exactly how it has to play out. In that exact moment, that's when it's a long. And it's probably a big long. And that long is probably up to that 260 something.
Amazon. Can we look at this one?
250s. Amazon, so just like Hoodie, everybody gets a chance. They get one shot to retest the lows, and we're going to find out if this is done or not real quick. 196 is the after hours lows on Amazon. She took a shot today. Right now, there's a little, we call this a bear flag. I think when I talked about this last time, I said 185. It's actually 188. So it's not a whole lot left here. 188 is that 2021 all-time high over here. It's a massive support level. Just around 185, underneath 190. That's your big support. I don't know what that would be from the highs. So we're really close. I from a long-term perspective, I like Amazon here, no question. But I'm also, just like Hoodie, I'm also well aware that that this could go a little bit lower. So the market's in kind of a funny spot where there are certain stocks that are getting to investable levels. It's so true across the board. But as a trader, I still know like there's still possibly some more downside to go. So I can put both hats on in that instance. But anyways, from here to here, we have this like little earnings bounce to, I think it was even down here this morning, we opened up essentially at this local resistance and just kind of like instantly sold off. So we knew, So this morning, you know, both Hoodie and Amazon are going to attempt to fill these lows, just like Hood. There is a little session gap on Amazon today at 198. I think that filled to the penny from that overnight session. No, not to the penny, but pretty damn close. So that downside trade, if you're a bear, technically you're going to be short cover. You're going to be covering your shorts right here as a bear. So I can see a lot of short covering rallies coming for the next 36 to 48 hours.
But you think the trend is still down on Amazon?
Yeah. So, and that could be 205s.
So it would have to break the previous earnings level for you to even think of reversing the trend, which is like 230, basically.
215. So we're going to do it like this. So here is the actual earnings high and the low. I'll just take it from the after hours low right here. So it's 217. So I'm not gonna, so this becomes a tradable level. So it's funny how this works every time. I didn't know that was going to be exacting, but it is exacting. And so what this high of 212 and a half is, it's from that earnings candle high to the after hours lows, literally. That's exactly what that is. So that's a 50% retracement of the earnings dump. And so if it's over 212, we have a tradable range. So first of all, if it doesn't break down tomorrow like this, I think we see that 212 again. So that's your counter trend bounce. It can actually go as high as 217 in change and still be counter trend bounce. So tradable, I mean, for sure tradable like that. That's 10% on Amazon. It's a big move for Amazon in a short, what I'm talking about is a very short period of time. But if it's over 217, then yeah, I think we are actually on the mend, but not before then. So a weak bounce, by the way, a weak bounce is more like 206, 207 that ends up getting rejected.
Which happened last Friday.
Yeah, that is nothing but a lower high. So is this the time to freak out and sell? No, you're going to sell the lows. Like, just relax, guys. Like, you're going to sell the lows if you sell right now. Don't do it. But you could have a little bounce, and then you want to see how price reacts when you get a little bounce.
But you think the bounces are for selling and getting out?
So far, up to today, they are. Like I said, it's really next week after we have CPI that we're going to see, is this real? Is this a real sell-off, or is this just fake shenanigans that are just shaking people out just so that we could go higher, right? Like, we're really going to find out very soon. By next Tuesday, we'll know.
SoFi.
Well, we had 22s. It's beyond 22s. I talked to Tevis, dude. I went on Milkman's stream the other day.
I saw a little bit of it. It was good.
Did you?
He called me yesterday. He was like, Jason is awesome.
You didn't even tell me that you were on there.
I was there for like 5 minutes, but I saw you there.
Yeah, Tevis was like he sold some $30 puts on SoFi, collected like $5, and he's a cost basis of 25. And he's like, what do I do? I was like, blah. So for certain situations, you can do something called a stock repair strategy. It's options, 701 kind of strategy, but eventually we'll get there. Otherwise, you guys can just Google or GPT. GPT is a verb now. Should you AI stock repair option strategy? But yeah, that's so if you do get a bounce, you could double up on your bounces and actually make some of that back. The downside is that they don't protect downside. But yeah, I think the next SoFi needs to get over $20.67. The downside right now, if it does get over that $20.67, I think at that point you can expect to bounce into those 25s. And when you get something like this, that's the moment I would actually put something like that on, because it's not going to take long for something like SoFi to rip 25%, very tradable. But we'll know like next week. So it was like that low 24s. Remember SoFi was holding that low 24 for so long. That's now going to be resistance when we get back to it. So just be aware. In the near term, I think you're basically retesting this prior breakout. This was our big broadening range from way back when at the 16s. TradingView has like done something crazy to their volume profile. So sorry. I don't know what's going on here with some of these things, the colors, but
I also think SoFi, Affirm, Coinhood, they're all in the same bucket right now, and they're all getting hit really bad.
Kind of, sort of, yeah. I don't hate the space, but what I will say is that fintech, and we all know this by now, anybody that's a SoFi shareholder of record, like for a very long time, or a Robinhood investor for a very long time, fintech specifically gets hit the hardest, the fastest, and it bottoms the first. So these stocks like your Robinhoods and your SoFi, you do actually want to pay attention to them, whether or not you own them, because they will bottom first. Their beta is higher on the downside and the upside, but they will tend to bottom first. So anyways, SoFi is as close to 17 as you can. You might even see like near 16, but that is your support. That was that prior breakout right over here. I think you see that people probably end up picking the stock up. So again, there's not a lot of downside left for this move that we just are completing right now. And just like Robinhood and Amazon, look, you want to take this last earnings low. If these stocks are not making new lows next week, they're done going down for a while. And a while is I would define that as like at least 45 days, which is a long time in trading world. But yeah, we'll take a shot at these lows. If we don't break it, then those lows they're gonna start becoming support. And we could trade around that. So we just broke structure. We're looking, the first step of a bounce forming is getting a higher low. And right here, right now, this is the lowest point that we can see these higher lows show up. And if we do get a bounce into next week, what I'll be telling you on Tuesday is that whatever the high was for this week, so on SoFi, it's 21, we want to see that big bounce, break that 21, expect it to come down. And then we want to see another higher low, just like this. So I want to see structure appear just like that to be bullish again, at least for a counter trend bounce, a bigger counter trend bounce, one of these like, I can make a ton of money counter trend bounces, but I need to see that. So right now, this is where you start to watch. This is where if you're short, you want to start covering your shorts and expect some kind of bounce with the caveat of let's see what happens tomorrow with CPI. Nebius. So I'm just thinking, where do you want to be? We got earnings yesterday?
This morning.
So same kind of thing. you get one shot at the highs, which is 93. I did get this alert, but I didn't actually text you because of the market conditions right now, or the environment that we're in. I mean, I don't think there's a question on whether or not the hard commodities are getting bought and they're good to own. But the neo clouds and things are not going to be in the same. It's not the same thing. But I don't see this doing anything. So we're just basically going to move this over. And so I still need to see a break over that 93. 93 is, and remains resistance. This would have been a great stock to sell your straddle on. You would have cleaned house. Did anybody sell cover calls or cash declared puts on Nebius? Because that is the perfect, I mean, good God.
It's stuck in a good range, and the premiums are very good.
Yeah, this is like, you want to be juicing this. This is like, I want to be juicing these premiums for sure. Sell calls all day long, sell puts, down to the next time I'm going to text Amit, guys, is like sub 60. So you could sell puts in this area if it's at the lows. But yeah, this is very range bound. Cover calls on this guy, because volatility is so hot, are going to print for you for sure. So resistance remains very near term resistance is 93. The major resistance that's important to actually break through to say, hey, no more cover calls. No more cover calls over 108. So if you're over 108, then you're going to 120, and you're probably going to go higher after that. So as long as it's within this range, that selling like 110 and $60 calls, or 110 calls, $160 puts, $65 puts. That's going to be a printer for you. Or you could just do condors and forget about owning the stock if you don't care. Which now that I say that out loud, I will legitimately think about doing.
We have a headline here real quick. NVIDIA to lease data center funded by $3.8 billion of junk bonds. I don't know exactly
junk bonds,
which data center or how they're doing this, but that is the headline for NVIDIA. Can we do Rocket Lab and ASTS? What do you think of the space trade?
So last time Rocket Lab was 60, it actually got 60. So that was a good dip, but our bounce, the problem was that our bounce didn't make a new high. So here's the channel. If this was our last high, this bounce needed to get over that, needed to be higher than that. And it wasn't. So it ends up locking in a lower high. And so best case scenario, same thing for Rocket Lab here. Best case scenario is that this is a higher low. If that's a higher low, I expect this to be at 74, actually, at which point look out, because I think that could be, if it stops at 74, that is yet another lower high. High beta here. I don't know the launch schedule or anything like that, but the low end of this is as close to 60. You might even be able to see lower than 60. Depends on your market environment. But technically speaking, if it's not a bear market, that sub 60 level remains like that's your technical dip. Technically, a very basic, very typical, what you would always expect kind of dip to be.
Okay, and then ASTS.
This is the equivalent of like Hood at 70.
Yeah, I think that's a fair comparison.
What was it?
ASTS. They announced dilution yesterday. That's what
are they buying?
I don't even know. I don't know why they need another billion, but I guess they do.
I don't even know. So this was a 129, like target acquired. You're right there. You want to see this kind of chill. Yeah, I don't like this. I don't like this right now. This looks heavy. Like, if this is heavy, then so 76s is what needs to hold on this kind of pullback, and that's going to be fine for where it is. But if it's not holding 76, that's the equivalent of Hood losing 70, and you have a big velocity move to the downside that's into the 50s, mid to low 50s, if it doesn't hold. But here now, again, this is the bounce spot. This is a bounce spot. Let me just see where it could bounce to. It would be a counter trend bounce. So if you get a bounce, it's got to get back up over 105 and hold. If it doesn't get back up over 105 from here and hold, you're in trouble. So basically it needs to break this 105, and that would be good. And if that happens, then I would expect another higher low. So that would get faded for sure from anybody that was caught long up here. They would sell into that. But if that locks a higher low somewhere around 88, that's the structure that you need to see.
Okay. AMD.
So that was our spot. We got the 187. I actually went long on this one when it hit that level, just because we had it. I took it for a trade right off of this level. So this is, picture perfect. So the thing about AMD, as I'm looking at it, and I hadn't looked at it today, I'm going to change the timer to 2.5. Is that cool? Just because I know that we're moving fast. We don't need a full 5 right now. But it needs to hold this 208 like level. So this yellow line is 208.30. Otherwise, this is a kind of a chop zone just below 200. 187 or something like that was the lows that I was looking for before. I believe this was a retest of prior support here. Anyways, so see that 187? It's an inflection point for sure. You can see it on the chart when you zoom out quite a bit. There's a lot of reaction at that price. So I thought that price was a good price for a bounce. But again, 227 is your trend. So AMD, if it's over 227, we're looking better. This was that kind of like potential consolidation that AMD is in. So if I just kind of like lock these lows here. So low, little breach right here. I can see this come down a couple bucks, but I don't want to see much more than that. And if it gets over 208, I'm more constructive on AMD, believe it or not, than a lot of things right now, just because of trade location. So if this was going to be, a higher low, that 187 retests a pretty critical level. You just don't want to see it lose that. And so in order for this to stay in a bounce kind of range, I need to get up and through 210 and ultimately 227. And that could be a good spot, but it's weak right now. This is a very weak bounce. I saw weak bounces across the board, not super encouraging. So just, again, more cautious than optimistic.
Let's do Reddit. A lot of people think this is a dip buy here.
If it's a full-blown bull market, things become dip buys. But if the market's on edge, things are not dip buys. Like that's just the environment. Oh no, this is definitely not a dip buy.
Why?
This is beyond any technical support. This is a short. This is going to 113, sorry. So for sure, in this area right here, this is extremely high probability. Fundamentals aside, I don't really care. You're gonna fill this from this perspective. You got an acceleration level that's going to be 120s, and if it doesn't go 120s, it's the 70s again. But that's too much to say. But right now, this does become a dip buy later if and only if it's over 155. But this 150 level, that's a bad break. That's a real bad break. So that's a Yeah, so you can't see this probably on my screen, but see this here? We're like green is buyers, white is sellers. All buyers disappeared at 137. So even if this bounces to 137, I would defer to going that way and filling the rest of this because it's got some work to do. That's a lot of momentum. You're in an active squeeze to the downside, and you got, no.
Do you also, so Reddit had a really good earnings. Do you think when stocks are going down after earnings like this, it's not bullish writ large?
It's not. How could it be? So it's like, there's you trade the news. People trade the news. Vishal, Stock Talk trades the news a lot. I trade news in a sense. But one thing about trading events across the board is that if bad news, I'll say from a bullish perspective first, because most people are naturally bulls. If bad news doesn't take your stock down, that's super bullish. Like you want to inverse that. If bad news hits the tape, my stock doesn't get hit, it actually goes up a little bit, I'm going heavy long, right? Because what that means is that the news was already baked into the price. Nobody cared, right? And it's now it's passed and we're back in the clear and we're going up, baby. But if good news hits and the stock doesn't react, that's the opposite.
Yeah, and I think we've been seeing that across the board. We can do AppLovin next. I mean, this one is the poster child for phenomenal earnings. And then
was it?
Yeah.
Yeah. Well, I mean, I still owe you a thank you for not making me buy the thing. I just there are good places in the market, right? Software specifically just isn't one. And we do group coaching once a week. In my group, IGV is the sector that tracks the software ETF. I think that's an incredibly important chart to start paying attention to. I don't know, like I've been saying, I don't know that we have a lot of downside to go. But if we do, it's very clear to me where it needs to go, and we could go over that. I think that's probably another very important chart, generally speaking. Look at this. Even the short report walked who was the short, right? The big short, whatever, on AppLovin. They walked it back and the stock took a little bit of a bounce, but it didn't hold it. So like, that's weird, right?
Oh, it's very weird. And then earnings were phenomenal and 20% down, really? Like
for right now, what I would say is the end of today, to me, just very clearly, people afraid of tomorrow. Nobody knows what's gonna hit the tape tomorrow in terms of CPI. And I think so the NFP data gave us a bearish skew at the trend perspective, just so you guys know it did. CPI will solidify whether or not it's like a bearish trend from here moving forward. And when I say that, I just mean, look, we got another little wave to surf to the downside. You can protect it. You'll probably make a ton of cash because you make more going down than you do going up. True story, because it stairs up, elevator down. And then you take those profits and you put it in your long-term report and you create some generational wealth. But until then, it's okay. There's a little bit more to go. This is a bad break again, but it has to get over 410. AppLovin has like a daily range of some ungodly number. It's like a 5 or 10% average daily range.
Yeah.
Like it's insane. So that's $30 in any given day, like on any given day for AppLovin. This thing is if I was just like equity trader, I would be trading the crap out of this because this seems like a great trader, not going to lie. But yeah, you're going to hit this low. You're right at support. So you've breached it. But even if you get a bounce, you gotta hold 410, 415. It's super important that you get over that. That 415 is from right here. Like really important. This is just like Reddit. So this is a bad break. It's a real bad break. And if if it breaks through, a pullback at the market index level would put AppLovin at 235 if we got a pullback at the index level, not before then. But we don't have it yet.
Meta?
So Meta's another perfect example. Where's earnings? So earnings here. So this was a good earnings report, right? So it's the exact same situation. I'll just drop this to a 30-minute chart really quick and show you guys what I mean. Because now here's a stock that actually goes up, right, on earnings. And I think last Tuesday I said, yeah, we're going back like 640s, I think I said. And it was very much because of the same thing. So you have your high right here. You get one shot to really break it. And it tapped it, but then you lock a lower high. So at this point, this moment, you know you're going to give it all back, which is what you do. And so here now, you're giving more than that back. And so 640s. Again, I said low 640s last time we were here, and here we are. So this is what I mean. Like the shorts are kind of played out for right now. I could see 636 easily. That was that. So remember how we got to this 580, 590 level. It was always, hey, if you get through 636, you can get this push pretty quickly. But if you lose 636, we're going to go back down to 600. And so if you lose 636, that remains. We're going to go back down to 600. Otherwise, there's not a lot of meat left on the bone for a short. And if it does go long, this 636 is your inflection point. Put a line on your chart, set an alert, however you need to do it. Meta 636, alert me. Now I want to watch and I want to see what happens to the stock at $636. And that's going to tell you what's going to happen next. Whether it goes back down to 6 or back up to 690. But it's at best consolidating 45 days to the like sideways in this general area, which is a big area. It's tradable area.
Google?
What happened to Google today?
I think Waymo had some good headlines, and that's what helped it. But ever since that got hit,
Google is the last general standing right now, right? The last of the Mohicans from the Mag 7.
Yes.
So it's Google, and it's just Google. So this becomes also a very important chart because, it's just Google. So right now, all I can see people trying to hide out. My sentiment around Google being in the perfect time and spot to sell cover calls and straddle, like short straddles, remains actually. So I think that eventually Google will probably end up pulling back. The pullback is to 240 down here if the market cracks, which it has not yet. But until I see this, I actually expect Google to remain pretty resilient with support around that 295 and then chop between 295 to 330. This would be a counter trend bounce, just so you know, and then back down and then back up. So this is that kind of range between 330 to 300 that Google has and remains sitting in. And so until proven otherwise, I'm going to assume that remains for Google.
Okay. Tessie.
Tesla. She loves to be counter trend, dude. So what is any of my crew here? Why did nobody tell me that Tesla was at 415 today? Oh my God.
At 418. Why is that the level? If it breaks,
it's the level. It's the level that we've been talking about forever. 415 is it's right here. It's 2021 all-time high, right? It's the big pivot.
It is, yeah.
It's the big pivot. It's the breakdown of 2025, right? December 2025. This is the spot at which Tessie is drawn to. And the biggest inflection point. So here now, what we want to do, Tesla, that bounce 435, not really good enough, Tessie.
Dude, Tesla trades at a crazy multiple. If we actually go bearish I don't know how this stays above 400. And
No, it's not. But here at 415 is the big inflection point for Tessie. So I could see off of this level, people stepping in one more time, and you could get a tradable range. Look, I'm an options trader, so like I can 5x my money on this kind of a move, like easily. So I'm all about that. But it's to test this prevailing kind of downtrend right now, and then you might see this little breach. But your resistance is 450 on Tessie. I don't see a reason to break just yet, other than the market just frankly being scared today at the close. The market's just scared about CPI because it doesn't know. Nobody knows. And so again, we are done for the current move. We're about to get the next wave to surf, and we'll know if 415 breaks. I do not expect this 390 to hold. If 415 breaks in strength, I would actually see 350s for a tradable move, a big tradable move. But otherwise, this is a counter trend move, also very much tradable. 415 is the pivot on Tesla, was, and remains to be the big inflection point. So heavy watch on Tesla moving forward to see what you're going to have a tradable move on this. Very tradable.
Let's do IGV. And are you buying the dip in software at all?
So if I'm net short a lot of things, my hedge is going to be IGV here. So what I will say long as a hedge, if I'm net short across the board, I'm gonna IGV. The sector is going to tell me where we're going here. So this downtrend, we have a little bit of a, this one I might go a little bit longer on because it's a more it's more important chart. So we have a little bit of your pattern for your pattern people here. That's what this looks like. This though, just so you know, actually has played out already and extending just a bit, right? So this can extend, but that target, so if you hear anybody yapping about head and shoulders on IGV, listen, it's nonsense right now because it's already played out, pattern complete, forget about it. What is important though is that this level that we're coming up to right here is a main inflection point for IGV. Also, you know, the thing about stocks over 70 go to 120, stocks to lose 120 typically go to 70. Hoodie, you know, that's what happens. IGV is doing the same thing. So we're kind of, again, at our downside targets. So I'm going to do one thing really quick. So if I just connect kind of like these lower lows here, that is my downside, and that's the low 60s. But for right now, if I were to take these, which is weaker, but I'd rather have vertical, like more horizontal type lines, if you will. This is kind of like where around the 77 area, that's the low end of support. So we're at the low end of support on IGV. This is the sector that holds our Palantirs, holds our freaking CRMs, Adobes, all that kind of stuff. You want to talk about oversold, fine. This is probably insanely oversold as a sector. But it's actually, never mind. It's not that bad. I mean, it's bad, but it's been worse.
Yeah,
it's been worse over here.
Yeah. I mean, retail's been buying this. We've seen from the data. Yeah.
So I don't mind this as a broad kind of like, if I want to pay attention to a sector to tell me whether or not the software sell-off is coming to a completion, this is the ticker that's going to tell you. And it's very close to basic support. So what I'm saying is that even if we have a little red in the morning, the best case scenario tomorrow, just so you guys know, is that we open up red, slightly red, and then instantly go green. And we go green all day and we carry through multiple days. Like that would be, all right, we're going to get a nice bounce, right? And a ticker like IGV is going to be the one that tells you that. You can look across the board for some of your sectors, but yeah, this is at support right now. So I don't want to see this flush down because we know we have buyers in this level, historical buyers. And so The question becomes tomorrow and the subsequent week after that, by the time we see each other next on Tuesday, if we're trading below this like 75 area, look, it's going to be in the 60s. But if not, this is the first spot, the first big spot that we should expect some kind of dip buyers to eventually show up. And the thing is that if it doesn't, it's just going to be, you end up pressing the downside bet. That's what you should do in this instance. I don't mean sell, by the way. Also, any investors out there, I don't mean sell your stocks. This channel has a lot of investors. You don't sell stocks for technical reasons. You don't sell investments for technical reasons. You invest for fundamental reasons, not technical reasons. That's it. It just means like, hey, we have a little pullback possibly coming, but right now, the short should be coming to an end, and we should see some kind of a counter trend bounce all the way up potentially to 100. And like I took some upside calls here as a hedge because I am short a lot of names. Well, not a lot of names. My biggest short is IBM right now. That I just like, well, if you want to short something, go ahead, short IBM. I don't know. Yeah, this I could see a face ripping bounce on IGV into 98s, at which point I might even reverse on that and go short again. But this could be a big spot for a bounce.
Bitcoin.
See what happens. I get these comments now when I'm trying to go fast. This guy sounds like he's going 1,000 miles an hour every day. I'm trying to go fast for you guys so we cover as many things as possible. Bidding don't look good.
Dude, did this bottom at 60 or you think it's...
Well, that was our line, 59,600. And we basically got there. 2021 all-time high is 69,000. No. You know, there are certain things like I'm looking for a reason to take some hedges off or some shorts off. I just don't have the reason to do it yet. You know, even hoodie, like I look at the cover calls, which are not going to do much favor to me any lower. And at a certain point, I'm like, okay, do I have a reason to buy him back? No, I don't have a reason to buy him back. I want to, but I don't have a reason to buy him back. I do have a reason to DCA into long-term, but I don't have a reason to buy him back. Best case scenario, you get a higher low. And if we do get a higher low, expect some sideways action here, but literally everything is at the spot. Like it's literally, this is the spot. So
that's why this is really the move we had today. I thought was interesting because everything, as you said, is at the spot, very close or below the spot we were at last Thursday. So tomorrow, as you keep saying, it's make or break. We're either
it is make or break,
or we're going down like heavily.
Yeah. So I think that's, you know, my posts. Follow me on Twitter if you're not, right? I try to put the updates as best as possible. I was kind of like broadcasting on the rallies that, look, it's going to be absolutely tradable. We can get excited about it. But from an investing perspective, that dip wasn't necessarily the best dip. And since we've broken trend, what I would like to see, the best thing that I can see right now is that we actually go sideways. And then we start to digest this because markets run and then they rest. So that means I need to see a resting phase in order for me to know that we're done running to the downside, right? Like, please, can we just be done? Stop the bleeding. And to stop the bleeding, I need to go and take a rest. And hopefully after the rest, I can bounce a little bit and it'll be a good one because
it's like every day down another 20 or 30 grand. It's like, okay, this is like, can we chill for a little bit?
I mean,
go up, but can we chill?
Well, let's be real. From an investing perspective, that's not trading, right? Investing, you're not trying to make money every day, right? Like you can't do that. That's not investing. But and if you expect to make money every day investing, you're high. Like get out of here. That's not how it works. But you know, long term for sure, we're talking about generational type wealth. We're talking about our retirement accounts and our kids' retirements, really. So, I mean, from that perspective, yeah, these are decent spots for a small ad, but with the caveat, like also knowing I want a lot of cash on the side at this point in time, because I come the bloody lows, I want to be loading the boat so heavy because the next washout is really going to be the one to buy on like the next big washout is probably going to be very viable.
Can we do Microsoft? And if you're still buying this?
Yeah, no. So it's between under 415 down to 375. So that's take a shot. I think I took the shot like right in here. 375 is kind of like that lower end of resistance. 370 if you want, somewhere as close to that. So again, Microsoft down pretty heavy from the highs. I think it's worth a shot as long as your time horizon is long enough. Look, if I'm buying Microsoft here, just know that my time horizon is longer than 3 years. Like you can't, like options go out like 2 years because because anything like under 2 years is basically going to be a trade, right? Over that is an investment. So I'm thinking time horizon that's longer than end of 2028. So yeah, I think that's perfectly fine spot. But the next spot is going to be as close to 375 as I can on Microsoft for this lower area of support. And investing, I'm not trying to be ultra precise. Like I really don't care if it's like 375 versus 373 versus 368 versus 380. I don't really care. Like if it's in that general area, that's where I'd like to pick it up next.
Netflix.
But yeah, this is the broader uptrend. If this breaks, the reason it's that is because that would be an acceleration downside into this area, which 350, is actually like deep support. I don't know that we get there. Microsoft never gives you exactly that, so I say 375. Oh,
broke below 76 today.
Ding! There it is, baby. So it's at my level of interest. I see no buyers in sight.
You know, it's one of the top 10 stocks on Robinhood now, Netflix.
75 is the number.
We're there.
We are absolutely there.
All right, so are you buying?
No.
It's like you get to your level and it's like, well, maybe it can go lower.
No. So I will. So 50% retracement is fine. It's good. It's basic, right? I'm a trader, so I'm a greedy bastard, right? Like I'm super greedy, and I want in the 60s. So what I will say is that
you wouldn't nibble here for the long term, or
if your time horizon's over 3 years, absolutely, this is it, right? Like we're coming into it. So the bloodier it gets, the better it becomes as an investor. So if you're a real investor, you should not care about this. Like if you're a real investor, you want this to go lower. So just so you guys know, like you want this to go lower if you're an investor. A 50% retracement is basic. Usually I get deeper than 50%. Usually we see 50 deeper than 50%. Deeper than 50% is in the 60 area. This is actual support. Like this is real support. So I like it in this area a lot. This becomes a tradable range. That's a pretty big candle today. It looks like a lot of people threw it in the dumpster today. I don't want to go shorten the hole on this. So here's what I'll do. I think that this can bounce into this prior area here. These are the lows. That's $80. A very weak bounce on Netflix is 82, something like that. Basically, just where we were a couple days ago. If it makes a higher low after that, then I'll probably go ahead, dude, and start nibbling. But with the intention of buying lower here, more there. You never were a fan of Netflix, though. What happened? Now he wants Netflix.
No, I'm still not a fan of Netflix, but at some point it gets too cheap, right?
All right. So Netflix is like Meta, just like it actually, when it makes moves, it's very high beta. Yeah. Netflix drawdown was 700 to 170 last time. We're not getting there. There's no reason to see that happening right now, but it was a 75% drawdown on the last one, just like Meta. Meta was the same thing. So was NVIDIA, by the way.
That was 22. That was everything.
Yeah. That was I mean, dude, if we get that kind of stuff, like, look at this 77%. You know, I'm not trying to take like reverse mortgages out or anything like that or loans, but like this is not the spot to do that. But if I saw something like that, oh yeah. Like, let me make some phone calls, but I'm not there yet.
Yeah. Okay.
Steve knows the general too. He forgot. It's the same thing. It's like the general from whenever it was like, you know, take your shot when you see the whites of their eyes. Shoot. Wait till you see the whites of their eyes is the saying. Wait till you see the whites of their eyes. And when it's I think this is PG enough. We were talking about it the other day. It's like the pucker level. If I'm puckering, if I get a pucker level 9, like it's probably time to buy. This is like pucker level 5, or 4, right? I'm like not even that phased. So it's cool. But if you're really thinking, oh shit, I gotta sell this, you usually do that at the lows. And so like I'd rather buy the deep fear.
Okay, Zeta.
Well, Zeta is beta, high beta. I tried to tell him. He asked me about this one too. I was like, no, you gotta wait. But it's this little area. Zeta actually has a very weird level. Is Steve in chat? Do they have earnings next week? So earnings, fundamentals are greater than technicals. Just so everybody knows, fundamentals supersede technicals all day, every day. Technicals can kind of just tell you like the 3 months at a time is, and you can forecast, but realistically, pretty accurate for 3 months, 3 months at a time. But this, I think I told him as close to 13 as you can, because, you know, in the Wayback Machine over here, we had some people. This is where Zeta last had its massive inflection point. Probably a completely different company then. Doesn't matter though, because the chart remembers, you know, it rhymes with history. So 1580 is a key break level. That was this prior support. So what just happened today, the story of price action, because it's all a story. You got to read the tea leaves. The tea leaves are saying that everybody that bought here at 1596, that forgot to sell over at 25, just decided that they don't want to go red on their trade, and they exited stage left. So that's when you get this kind of massive inflection. That's what just happened. And so that becomes your next pivot level. The next lower area down here is 1350 for your general support in this area below 1350. So that ends up being a support level. Just like Netflix, even though it hits my level, you have levels because what you want to do is you want to watch how price acts when it gets to your level and see, are they buying this or are they not? What I will tell you though, is that on this chart, anybody that sold here at 1588, the people that sniped this low, right, and decided to throw the rest out today, if it got back over 1590 and did something like this, what do you guys think they're going to do? They're probably going to buy it back, right? Yeah. And this is how you end up selling the lows or selling the lows and buying the highs. It just typical like psychology here of price. It's like anybody that market sold today created this little push down. If it gets back over, they're going to think that it's going higher again and they're going to buy it back. And that situation, that moment, that's how we get these counter trend rallies. They're not necessarily reversals, because those people have a tendency to sell the lows and buy the highs. They're probably going to keep buying and they're going to buy the high again. Don't do that. That's not what we're going to do. But just know that's that looks like what's about to happen. What's Connie saying? LEU.
LEU. Okay, Jason, let me just ask you right now. So I literally have to leave at 6. If you want to stay on for 10 minutes and just talk to the chat, you can do that.
No, I think we're good. I think because it's important to know that energy is good. Oh, let me stop sharing. So energy is a good sector in general right now. Some of these LEU, Centrus, or Constellation Energy look actually pretty interesting. Tomorrow's a big day. It's not about the price action tomorrow. It's about how the stock market digests tomorrow. So it's about next week is what it's about. The charts in the meantime can look however they want to look. Quite frankly, it's a bunch of nonsense right now. And that's me, a technician, telling you guys, it's, if you sell now, you might sell a low, but it's more about watching how the market reacts and digests this week, next week. If we're trading above this week's high next week, it's all a bad dream. We're good. We're going to see all-time highs. But until then, we just are in a waiting game. So the best course of action is to wait. And I think that's the most important thing that I could tell you guys.
Yeah, and I think also what you're saying about certain levels have to be either broken or maintained above in order for us to like Stock Talk as well. He was on the show a couple of days ago, and exact same levels, 670 on the S&P. He was like, it has to hold, and if it doesn't, look out.
Well, they don't have to do anything. Stocks do whatever they want to do, right? But what that means is in order for the trend to hold, it has to be over 670. And if it's not, then we shouldn't like mince words here. We're probably going for a nice little pullback, in which case you want to have some cash available. And I think that's the fear of that is what we're seeing in the market, and why we're not able to get to net new highs is because every time we get a little bounce, people are selling into it. They're getting that cash ready for a dip, and it makes sense. We haven't had one in a long time. So are we due? For sure, we're due. But those are opportunities. And if you're an investor and if you're into actually creating wealth for you and your family, like, you want to be greedy at those points in time. You want to wait till you see the whites of their eyes, but you should start drooling pretty soon if we actually get those levels.
Jason, thank you. His Twitter is right there. His YouTube is right there as well. He streams every Monday. And next Tuesday, we'll definitely be back. And
we'll be back very soon. If you guys want to trade with me too, absolutely. I mean, if you could put it in the captions, we have a group. Yep. We are releasing like the apprenticeship, which is that whole course that's take you from knowing nothing to being able to trade like a professional. You get to trade with us live. Me and my team, we do very well in all markets, but it's fun. It's good. Take a look. We have a little screening process, but if you at least show some interest, we give you a bunch of free stuff just for talking to us. So, all right, guys. Shampasta. Yes. Veterans. Oh, I got a bunch of veterans in there. So, ask them. They'll tell you about it. Love it.
Jason, thank you. Thank you, everybody.
All right.
We'll be back next Tuesday.
This is on time. We're leaving on time. We made it.
On time.
All right, dude. See ya.
Bye, everybody.
Bye, guys.